Are you a broke loser? Do you want to stop being a broke loser? Well, buy my book on Amazon. It's $2.99 for an ebook or $9.99 for a hardback. It's called Stop Being a Broke Loser. If you buy this book, you will no longer be a broke loser. So buy it now. Welcome back, Strongman Personal Finance. I'm Christopher Bell, certified public accountant, long-term boglehead investor, author of the book Stop Being a Broke Loser. It's on Amazon for $3. And not a big fan of Smith & Wesson. I thought it was Weston. Smith & Wesson brands. The gun manufacturer. Oh my god, guns are bad. Why don't I like Smith & Wesson? Because if you go on Everything Money, and you go look at the 8 pillars, it's all green. If it's all green, that means you should go ahead and buy the stock, right? Wrong! Because there's one big flaw that I see in Everything Money software. When you do your stock analyzer stuff, which we'll go through, I believe they base future revenue off of the last year's revenue growth. So what happens is, if the company that you're looking at has a massive fluke, windfall of revenue, for whatever reason, in this case, it's riots and pandemic and Democrats and whatever, all future projections that the software is using is going to start from that high point of revenue. Now, if let's say a company has $500,000 of revenue every year, and then all of a sudden they have $2 million of revenue the next year, and then it drops back down to $500,000. Well, if you start projecting from that $2 million of revenue, you're going to be completely skewed on your expectations of the stock's future growth. So in my opinion, instead of using this software, you might want to create your own Excel sheet and be able to actually directly input your revenue estimates, which whatever they are, for the next 5-10 years, whatever your analysis is. That's my opinion. So I can't really trust this software too much when it comes to the stock. Here's why. So if you go back to 2012, they had $456 million of revenue. And then that went up to 622, and then it went down to 587, and then it went down to 567, and then up to 78, up to 782, then up to 825, and then back down again to 616, 623, and then it's up again. It's almost like it goes in cycles, probably based on politics. As a matter of fact, let's look at this article right here. Gun stocks need Trump to lose because people get scared and go buy guns because they're scared the Democrats, liberals, are going to take their guns. Or hope more states copy Virginia. That's my state. Example. See, so it's like, it's all based on the political winds and moods. And to me, that's so hard to predict who's going to, win the next run for office. So to base your investment portfolio, or at least part of it, on the winds of politics, I don't like it. I think instead you should just have your portfolio based on businesses that can do well under all political regimes. I'm not against guns or anything like that, or gun stocks. I have weapons. But when it comes to gun stocks, where if the Democrats win, buy. If Trump wins, sell. I just don't like it. I think it's too freaking random and volatile. All right, so if you're looking at these 8 pillars, you could be completely misled by this because you could think, oh, wow, everything looks good. You look at the PE, 3.82. Oh, my God. Profit margin, 25%. That's a good profit margin. Return on equity, 108%. Return on invested capital, 94%. These freaking numbers are seriously misleading. I think what happened is, like I said, Smith & Wesson just had a massive, amazing year for the year ended July 2021. Because of all the crap that went on during the lockdowns, all the burning and pillaging and degeneracy that happened in our beautiful cities. And a bunch of people went and bought guns. Now, when everything opens back up and whatever happens with politics, with the president and the Democratic Party and states, you just don't know what's going to happen. Potentially gun sales could significantly decrease. And if you're basing your projections off of this one exceptional quarter, you're going to get screwed, okay? So I wish they could have an option here of maybe being able to customize this a little bit to where, let's say you think the revenue for the previous year was just insanely high. Let's say you could like pick a starting point for revenue. Like let me say, oh, maybe revenue will be $700 million in 2022. You know, just because maybe there's going to be a drop in gun sales because maybe all the tension blows over. Well, it'd be nice to be able to like type that somewhere into here so I can then start those projections. Because what I did here is, you know, you're looking at revenue growth, 1 year, 28, 5 years, 75, 10 years, 10%. Well, to me, that's very misleading because you have ups and downs and ups and downs. Then you had a crazy fluke spike based on a crazy once in 100 years pandemic. All right. So in my opinion, I think the revenue might fall, but whatever. So even using really conservative assumptions, 0, 3, 6 for revenue growth, -1, -2, -3, profit margin, I went super conservative. It's still showing the stock as a buy, but to me, it's too volatile. It could be a banger. Maybe you are less worried about revenue growth going in the future. Maybe I'm wrong. I don't know. But for a stock that just moves based on the political winds, I wouldn't touch this stock, okay? But that's my personal investing philosophy. I mean, we can go look at some of their weapons real quick. Smith & Wesson. Ooh. What do they got? What deliciousness. Ooh, look at this warrior right here. Purpose, home defense, concealed carry, hunting, competitive shooting, law enforcement, military, engraving and gunsmithing, products. Let's look at the long guns. I like rifles. Ooh, that's pretty sexy. Delicious. Okay, so they got, looks like a MNP-15. It's just an M4, right? And then they have, whatever this, I think this thing is kind of weird looking. I don't know what that is. And then they have a sporting M14. Okay. I mean, it's pretty cool stuff. I might actually go buy one of these. Maybe I'll be the reason the stock goes up because of all the revenue. But yeah, I mean, that's just my personal opinion. So be very careful with everything money software. I think it's great. I think it's fantastic. But before you just blindly throw crap into here, like, oh, it's low of 7% revenue growth and high of 30. You need to really look and see why revenue went up so much. So if you see like an insanely low PE ratio or an insanely high return on invested capital, like over 20%, you need to be freaking careful, okay? Anyway, so no, I am not buying Smith & Wesson. I think it's too speculative. I think it's too volatile. I mean, look at this crap. Look at this. Looks like it's spiked up after, yeah, as soon as the pandemic started. But if the pandemic ends, I mean, I could see a massive downtrend in the future. I don't know. But I'm not a technical analysis guy. Anyway, that's my thoughts. Hope you like this video. Like, subscribe, tell your friends about me. Watch all the ads about... If you see an ad from like a day trader or, you know, any kind of scumbag that I don't like, I want you to watch that full ad so that person gets charged. For every other ad, whatever, you watch it or you watch them or you don't. But when it comes to scumbag day traders, I want them to be charged so they can pay for my viewers to see their ad, and then my viewers will just blow them off because they're a bunch of freaking losers. Anyway, that's it. Talk to you later. Cheers!